All right, today we're going to talk about debt, not credit, but debt, and what type of debt programs and how they affect your credit in general. So if I were to ask you which is the worst for your credit, what would you think?
Bankruptcy, obviously.
Which is what most people would assume. But we're going to go through why bankruptcy may be better, or you can rebuild your credit faster through a bankruptcy than any other debt program. Canadians generally talk about credit and debt interchangeably.
Yep.
I see them as two completely different subjects. So credit, and then there's debt. Okay, so we're going to talk about debt or different debt programs and what you should know before you enter into one.
Okay.
So how does the different debt programs affect your credit during and after the debt program?
Okay.
It's a question I get a lot. And I would love to use the following example as a reference to give some pop culture in there. The problem is my wife has not seen either of these.
Oh, great.
So I'd love to say that what we are going to do is help you know the end from the beginning, or that eliminating your debt is as easy as a snap of the fingers.
Okay.
But as you haven't seen it, yeah, probably over that. We have these different debt programs. There's other ones or different ways to pay down your debt and eliminate debt. But in this video, we're going to talk about these 4 programs.
Okay.
If you've never heard of these or not familiar with them, I do have links in the show notes or the more info to essentially go through the pros and cons of each. And there's a lot of different things that would affect your decision on whether it's a good idea or not. But what we're going to do is only focus on how it affects your credit.
Okay.
Right? So not promoting one over the other. We're essentially just outlining how each one affects your credit. And hopefully that will help you make the best decision for you and your family. Most financial professionals would outline which one affects your credit from least to worst in this way.
Okay.
However, I, once again, look at things a little differently, a little unique. So after studying thousands of credit reports and been doing this way too long, this is how I would see how they affect your credit.
Okay.
That might freak out a lot of Canadians, knowing that all debt programs essentially keep you away from best rates and best terms. There are differences, but the main point I want to get across is they essentially affect your credit negatively in the exact same way.
I don't know if I understand that correctly.
Okay.
Just because you have said before that a bankruptcy would affect your credit pretty negatively.
Mm-hmm.
So how would consolidating your credit at a bankruptcy
be equal?
Yeah, essentially.
Let me put it as an analogy. And because you love sports.
Oh gosh, why do you always have
Because I tried to think of something else and I couldn't. All right, so take this analogy.
Okay.
In hockey.
Okay. Very familiar with the sport.
So with hockey,
Yeah.
if you break a rule, you go to the penalty box.
Okay.
Now, there's different types of penalties. But essentially, regardless of what type of penalty you get, you're essentially taken out of the game equally.
Couldn't you have said, instead of this analogy, couldn't you have said you break a law and there's different penalties for each law that you
I didn't
break?
want to say you're going to jail.
Okay, fine. I'm just saying that, I'm not even listening to what you're saying. I'm trying to think of a different analogy instead of...
All right,
Anyway,
you keep
sorry.
on thinking of one.
No, it's
You
fine.
can just ignore me the rest, and hopefully you come up with one.
It's fine.
With that analogy, if you make a contract with a bank. So you have agreed when you signed up for that credit account, a loan, credit card, line of credit, whatever it is, you agreed to pay on time according to the contract.
Right.
A debt program, regardless of how much you're paying back or what type of debt program it is, essentially you're renegotiating your
Like how much you're going to pay back.
well, you're not following the original contract.
Right.
And because you've done that, or when you do that, so if you don't pay on time originally how it was set up, you're in the penalty box. Different types of penalties will keep you in the penalty box for longer or different time frames. But as far as playing the credit game or getting best rates and best terms, all debt programs, while you are in the program or in the penalty box, you most likely won't get approved for best rates and best terms.
Got it. Okay, that makes sense.
So that's the point that I want to make sure.
Yeah.
So when looking at reestablishing your credit or deciding which debt program is best for you, there are two things to consider. The first one is how long you're in the penalty box, or what I would consider in the program for.
Okay.
So how long you're making the payments to the trustee or the credit counselor, or how long it will take you to be absolutely completed and out, back. Here's a slide that outlines how long you're in each program, as long as you don't pay it off early.
Can you pay it off early in each of these programs, or is it just...
Everyone except for a bankruptcy.
Okay.
So other than a bankruptcy, you can pay any of the other ones off early.
Okay.
Yeah. A lot of people would look at that and say, well, I didn't know I wasn't going to be able to get approved for best rates and best terms while I was
like making payments to credit counseling.
or whatever.
Okay.
So that's why it's so important that you understand that you really need to pay it off as quickly as possible. Mm-hmm. That's what matters most when reestablishing or getting back to best rates and best terms.
Okay.
And the second is how long it will take before lenders will consider that your credit is reestablished.
Right.
Or rebuilt. So a lot of financial professionals will focus more on how long it stays on your credit report, which you can see here.
So looking at this, you would, like, bankruptcy would be the worst.
Exactly. So when you focus on how long it stays on your credit report, if that's what mattered most, yes, then I would agree bankruptcy would be the worst because it stays on there the longest. However, my focus, my message to people or Canadians when trying to determine which program works best is to ignore how long it stays on your credit report, because a lot of lenders will approve you for best rates and best terms as long as you've reestablished your credit properly. So even though the bankruptcy shows up on the report, doesn't mean you're going to get declined for best rates as long as you've reestablished it properly.
Okay.
So what they're looking for and what they're really focused on is how long you've been out of the debt program. So they're looking for generally at least 2 years from completion of the debt program.
Okay.
And that you've reestablished your credit, got new credit, using it properly, proven yourself that you can actually handle your credit and play by the rules. That is where their main focus is, not that it's still on your report.
Okay.
So this is where this becomes more important on how long you're in the debt program. And I've outlined this based on the months.
I just noticed with the bankruptcy that there's a range.
Yeah.
Okay.
It all depends on how much money you make.
Oh, okay.
So if you make a little, you'll be a 9-month bankruptcy generally. And then if you make more than the limit or the benchmark that they're looking, threshold, then it pushes you to the longer time frame.
Oh, okay.
So by modifying where the focus really should be, this is where I try and get consumers or Canadians to focus when looking at how everything's going to affect their credit, is essentially how long you're in the program plus how long it will take you to reestablish.
Okay.
And so when you enter these programs, these are the time frames that you need to focus on how long it's really going to keep you away from best rates and best terms, because that's what really matters.
Okay. So essentially, you need to be out of the program, and then about 2 years after you're out of each program, if you're rebuilding your credit properly, then you'll be able to get the best rates.
Yeah. So regardless of how long it stays on your report, the 2-year time frame is really what banks and lenders are looking for, and that's what will get
Even with
you
a bankruptcy?
even with a bankruptcy.
Okay.
So that is the key. Now, some lenders might make some exceptions when if you have a strong co-borrower or a lot of assets or whatever, you can always get past this. And some lenders may prefer, just because their own underwriting guidelines, they may prefer credit counseling as opposed to a bankruptcy. But generally speaking, most financial institutions paint all of them with the same brush.
But isn't it harder to get credit after you've been in a bankruptcy? Like, I don't understand how, because you need to have a pretty high credit limit, right? To get a mortgage.
So,
like, you couldn't go in with a $500 credit card.
Right.
As to try and get mortgage financing. And that's probably what you would typically get after you've been in a bankruptcy, right?
Right. But after a couple of years, they would bump that limit up, or there's ways to increase that limit if you are proving yourself with that new company.
Oh, okay.
So even though in our minds, whatever society or thoughts, bankruptcy is kind of like the worst thing that you can do. In reality, most lenders look at it the same way. And they would look at that credit card, $500 for someone who's been through credit counseling, the same. They would want that the same as regardless of what program you go into.
Okay.
Yeah. So let's review.
Okay.
What did you learn today?
It doesn't matter what debt program you're in. They're all essentially viewed as equal for your credit.
Yeah. They keep you equally away from best rates and best terms. So that's why we say they're equal in that aspect. Yep.
Okay. And
what's the most important part?
I hate this. How long you're in the program is what is going to determine how quickly you can rebuild your credit.
Or get back to best rates and best terms.
Best rates and best terms.
Best rates and best terms. That's what it's all about, guys. So that is absolutely correct.
Oh, good.
Yeah. I don't appreciate your attitude, but either way, you're right. There's a couple caveats. If it's a double bankruptcy, I never suggest a double bankruptcy because it kicks your time frame from 7 years on your credit report to 14.
Oh, jeez.
And as soon as a lender sees a double bankruptcy, you're pretty much declined.
Oh.
So that is a huge caveat and completely different from a first bankruptcy.
Okay.
The other thing is if you have a foreclosure or looking to include a foreclosure shortfall into a debt program, then you would need to check out the links in the more info, just because it complicates, or not complicates, it's just some things you need to know before you do that. The other thing is, want to make sure that everyone realizes I am not a licensed trustee. I am not a credit counselor. I don't do debt programs. So the information here is to give you an idea of how it affects your credit from the end to the beginning, or beginning from the end, whatever. But essentially know what you're getting into or how it affects your credit. That's what we're covering. We're not promoting a specific debt program. I'm not telling everyone to go bankrupt. I'm just saying that it is something to consider where you're in a bankruptcy for as little as 33 months, where it's keeping you from best rates and best terms, compared to, let's say, an orderly payment of debt, which would be 72 months. That's something that you as the consumer need to know. And that's what I wanted to get. That's Perfect. It. I'm done. Off my soapbox. And we'll see you next time.
If you have any other questions or want to learn more,
you can check out any of our social media and the links in the show notes or the more information down below. And we would be happy to go through it with you in more detail.